So global politics is uncertain. Nothing new there. But what about the global economy? You can check its health by looking at a number of factors, like the stock markets, or GDP projections, or consumer spending. For now, let's look at the markets. In the US, Standard & Poor is up 8% in the last 6 months. NASDAQ is up 14%, and Dow Jones around 3%. Now, these are solid numbers. But are we missing something here? Maybe a looming market crash. According to some investors, we are. Meet Michael Burry. You may know him as that guy from The Big Short. In 2008, he predicted the stock market crash. He made around $100 million in personal profits, plus $700 million for his investors. So he knows the market. And now he has placed another bet. It's worth around $1.6 billion. Once again, it's against the tide. Michael Burry is betting on a stock market crash. He placed the order in the last quarter. It makes up around 93% of his entire portfolio. So obviously he's confident about it, and he's not alone. Warren Buffett is doing the same thing. He's among the biggest investors in the world. His company sold shares worth $8 billion in the last quarter. Is that a lot for him? Well, not really. But once again, the timing is important. American stocks are supposed to be on the rebound. Inflation is cooling down, so the economy should be shooting up. But these ace investors do not think so. They're predicting a crash. Have they spotted something that we haven't? Well, the US is not really out of the woods yet. A couple of factors can still drag them down. Number one, of course, is China. Every single indicator from Beijing looks bad. Consumer spending, factory output, exports, fixed asset investments, all of it is in the negative. China's numbers look very bad. And this could have spillover effects on the US. Their Treasury Chief, Janet Yellen, admitted this, but she says Asian economies will be more affected. Factor number two is banks, American banks. A number of regional US banks have already collapsed, like First Republic and Silicon Valley. But the crisis is not over. Ratings agency Moody's has already downgraded 10 American banks. Another agency, Fitch, is warning of the same. They say dozens of US banks could be downgraded. We're talking about the big ones here, like JP Morgan Chase, Bank of America, Citibank. If they are downgraded, the impact will be huge. In fact, we're already seeing some downward movement. JP Morgan shares are down 2.7% in the last 5 days. Citibank is down 4%, and Bank of America around 5.6%. It tells you these credit ratings matter. Investors look at these ratings before putting their money in. Higher the rating, safer the investment, which is why a downgrade is bad news. But does it mean the markets will crash? I'm afraid it's not so simple. The US economy is going through a pretty weird phase. There's no other way to put it, really. Since March last year, the Federal Reserve has been hiking interest rates. They've done it 10 times. The lending rate is 5% higher than it was last year, and that's a lot, 5%. Ideally, this should have pulled the economy down. More unemployment, smaller GDP, less consumer spending. But the opposite is happening. Experts are predicting America's GDP to grow by 5.8% in this quarter. That's twice what it was last month. Unemployment has dipped to 3.5%. The US economy added 180,000 jobs in the last quarter. Spending is also up. Retail sales increased 0.7% last month. At the same time, inflation is down. It was 9% last year. It is 3% right now. So what exactly is happening? How is inflation falling without an economic contraction? Let me tell you what BlackRock is saying. It is the biggest investment firm in the world. It handles around $8 trillion in assets. BlackRock says this is all temporary. The US economy will remain stagnant throughout the rest of this year, neither expand nor contract. But next year, it could enter full employment stagnation. And what does that mean? Well, three things basically: weak economic growth, rising inflation, and shortage of labor. These three things could characterize the US economy next year. It's better than recession, but it also means no growth. Now, I must say this here. These are all different predictions. Each economist has something different to say about the US economy. Some business leaders are saying stagnation is great. Others say it's a disaster. Do you know why? Because we are in uncharted territory. Remember what we said about the Wuhan virus, how its long-term impacts cannot be predicted but only experienced. It's no different for the economy. The pandemic changed the structure of the global economy for the good or bad. Only time will tell.